Hello, traders. It's 8:04 a.m. Chicago time on Thursday, the 7th of November, 2019. Sorry about the delay here, starting 4 minutes late. Just ran into a technical issue a little bit. A lot of sophistication here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for joining this 1634th episode of the Trader Bite. This morning, risk on, clearly coming into today. The overall sentiment is to push higher on risk, and that's where we stand. It looks to me like. What is going on here? Futures. Okay. Looks like we're popping higher, and the S&Ps are trading at 30.86.87. The bonds are off an entire handle, one handle and 15 ticks. Gold is off $8, trading at $14.85, and the notes are trading down 20 big ticks. In the futures, crude is leading the pack, still trading around the composite point of control in crude, which is at 57.11. Crude's currently at 57.40. If it does not, based on what I saw, if it does not challenge the high put in yesterday at 57.85, we may see it turn down to 55, but there's talk of Saudi Arabia pressuring OPEC members to approve a rate cut. Now, it's convenient that they're asking for that because of this Aramco IPO. Higher oil prices will fetch a better IPO for Aramco. The leader in the indices is the Russell. The Russell is up 12.6 points, trading at 1605 or 0.8%. The DAX follows up 103 points. So that's where we stand. Really, the market is popping higher pretty strong. Overall, the theme here behind this push is that China's MOFCOM, whatever that is, I guess it's a ministry of some kind, says agreement has been reached with the U.S. to lift tariffs in phases as deal progresses. That's the big deal, and it's really pushed the markets higher overnight. That news came out quite early, quite a bit earlier. And at about the cash open for Europe, actually, it's came out during the Treasury Open in Europe about 2 a.m. Eastern, 1 Central, and that caused the S&Ps to rip from about 30.75 to about 30.92. So this is on news. So the theme today is that risk appetite finds some legs after China noted for a reciprocal phased rollback of tariffs if a trade deal's reached. Also, German industrial production data misses expectations, dims some recent optimism, stabilization of data in the region. German manufacturers appeared mired in a recession. So that's what we're looking at. And a half hour ago, we got initial jobless claims in the U.S., which came in a little bit better, 211,000 versus 215,000. Continuing claims came in a little bit worse at 1.69 million versus 1.68. So that's where we are. Not much more to say there. Looking ahead at what's on deck for today, we did get also the rate decision out of the Bank of England. And what's remaining ahead of us is Fed's Kaplan speech at 105, consumer credit at 3. These are not expected to move us. 7:10 p.m. Fed's Bostic, and then the monetary policy statement out of the Australian Reserve Bank at 6:30 Central, 7:30 Eastern, and then the big numbers from China this evening. China. this evening. Balance of trade, exports, and imports all come out at 10 p.m. expecting a market wiggle when those show up. Okay, so let's look at the review segment. The primary scenario yesterday is an open auction. We were opening in range, in value, on balance. So open auction is the expectation. I was looking for the key trade was 3077, 3078. If you recall, was looking for the low to be taken out as outlined here and here. Was looking for it to bounce back up, but ultimately was looking for a fill of 3065. So that was the key plan. The high of 3077, 78, and the low of approximately 3065. Now, how does the market accomplish this, right? So the way this was accomplished, the plan was on point. The way the market accomplished this is, here we are. We have what looked like an open drive down on the open, tests the low first thing. That was not expected. We expected more the market to open right here. So the stuff that happened to the left was not the expectation. Expected an open auction like this, a push to 3077, 78. Beautiful. Except that it was impossible to catch this trade because it occurred on news. And then we take out the low. There's the prior low, the green line. Take out the low, take it all the way down to 65 right here, and then expected a bounce and then a return to somewhere in the middle. That was scenario one as drawn here. Okay, that's scenario one. Well, it was done on news, tagged 3077. Within an instant, it was down at 3064. The opportunity that showed itself that was tradable, in my opinion, is the pullback to the 3071.72 area, which was the prior close VWAP on an impulse down. So this is a bona fide impulse down and looking for a continuation and a break of 65, and that ended up working out. We went to 63, then we pulled back to the low, to the prior low, and then we had a corrective what's called an ABC kind of correction back up. We ended up with a neutral day, right? Took out the IB low, IB high, IB low again, took out the IB high, closed near highs. The S&P really finished with a clear intent that it wanted to continue higher, but it ran out of time. So expected it to kind of continue stepping higher. This is not, of course, a trend close or anything like that, but we did shift the point of control higher, and we ended up closing near highs. So that's the recap of yesterday. Again, that it's pretty much exactly what was expected, and that's where we ended up. Now, on the overnight, pretty quiet. We end up popping immediately to 3078, push back down, and then we get the news. Pretty good rotation there, pretty good delta, pretty good volume, and we're flagging now. And so we end up with this very emaciated looking profile down below, double distribution. So what this, and it's hard to tell with this market. We're at all-time highs, so things don't function as we would normally expect. We've got to be careful here. The SOC, or the scene of the crime for this news, is really around 3075.50. 3075.50, and we're trading at 3087 right now. And this looks like a standard or a traditional impulse flag. So we're looking for the continuation move, which hasn't happened. We have not taken out the high of the impulse up, expecting another push higher before it gets exhausted. If there is exhaustion, if the buyers have run out. We're new all-time high territory. We're near the century figure up here at 3,100. This could easily roll over and push down to 75 again to the SOC. I would not, look, I'm not going to sit here and impose on the market what I think it should do. Market doesn't give a hoot. I could use meaner words, but the market doesn't care what I think. It doesn't care what you think. It doesn't care what a bunch of us think. The market's going to follow the collective, the collective demand and supply of whatever commodity we're trading. It doesn't matter what it is, as long as it has liquidity, as long as it has volume. It's going to follow the standard auction process. Okay. The thing is here, though, is that I have to come into today looking for longs because of where we are. But we are in a gap. We're in a gap, new all-time highs, and the tradition has been that a gap into new all-time highs leads us. Oh, did not want you. A gap in new all-time highs leads us to, in general, finish with a, it's hard to see here, to finish lower, right? There's that. This was an exception. It was a very strong day, but if you go back in time, we tend to gap, and then we end up, even if we don't fill the gap, we end up pushing lower and holding steady and leaving a gap below if we leave a gap. Generally, the market's responsive at new all-time highs, and the auction is normally responsive when we have a gap up like this, a gap up situation like that. So this is what I'm expecting. I'm expecting that we are in a gap, that we are in a flag, that we may push higher, but I'm also expecting that the market is likely to revert back to be responsive somewhat. Now, here we go again with the Monty Hall problem, right? If we expect responsive selling when we come in on a gap like this and we don't get it, guess what? We have a much, much stronger opportunity on the long side, and we're likely to be able to ride that long quite well. So I'm paying attention to both sides. I'm expecting that we are likely to have a continuation and a breach of 92.50, but I also know that we are in a gap at new all-time highs, which pulls in sellers more often than it has in the past. So has buyers in the past. So that's what I'm looking at. Here's what the order flow looks like. Well, I should have reloaded my data so that wouldn't happen. Let me close the trade box. So this is what happened overnight. I mean, it took out, you see these big bleeps. These are VWAP based order fills, but really they occur at the liquidity. You could see that it pushed right through and left very little in its wake in terms of bids. Dark matter, for those who are scientists. It left dark matter in its wake on the bid side. We do have a firm bid or offer at 30.95. This was here yesterday, and we expect a relatively firm offer at 30.90, which is slightly forming now. But overall, the market is, started right here at 30.75. 50. We're seeing bids kind of starting to cluster at 78, 79. Remember, 77 is yesterday's high. 78 was that swing high. 77 was the MC point of control that we talked about, which has shifted down to 30.73, 75, I think. And so pay attention to what's above in the 30.95 area. In the 30.95 area and 3,100, you can see that there's a lot of it gets a lot more colorful in the 97 to 100 zone up there. Below us, there's just not too much until you get into the 60s. There's not too much in terms of resting order flow, but the picture changes once we open. Not that dramatically, but the picture does change once we open here in 10 minutes. So that's what the order flow shows. Let's take a look at what's expected for today. By the way, if you're in Chicago, there's an event next Wednesday hosted by Anthony Crudelli's show at TT's office, Trading Technologies office, TechTap. I'm going to put up an Eventbrite for that. If you can attend, it'll be great. Great opportunity to meet. I'd like to meet you if you're in town. Here's what we're expecting for today. So I'm going to pull in the stock zone areas, my areas to engage with the market. These are all everything above the high. These are all projected levels, right? Measured moves, and we're pushing up against them. So we have this 3077, really key area, key test area coming back. We do have the 3083 as the all-time high before today. But this morning we're opening in the 3087, and I'm expecting an open auction that is likely to make an attempt higher, but ultimately is likely to be responsive, pull back into this 3082 area or so, and then hold steady into the session. I'm looking for about a range of about 92 to 80, something like that, 12 points, and I'm looking for it to hold steady. This is how it's responded in the past. I expect it to be the same. I do expect it to test higher at some point. The alternative is a market that's immediately responsive, pushes lower towards the 77, 78, impulse up, consolidate around the open, and then push that high and start walking towards that liquidity and the liquidity at 3096, which gives us a wider range if there is actual interest beyond what the move has already absorbed in the overnight session. Again, new all-time highs in a gap. So we have scenarios 3 and 4, open, test up, drive down, open, test down, drive up, the usual stuff. But overall, I'm expecting this to be somewhat responsive. Up to this point, we were one time framing down. We had the high, lower high, okay, breach of the low. So one time framing up ended, and then we are starting to one time frame down. The market left to its own devices would have actually, in my expectation, is that there's a higher probability that it would have actually turned over and pushed down to 60, 57, 50, and repaired some of these gap zones down here and taken us back to 30, 40. That's the natural course given how we've set up over the last few days. Remember, we gapped up and we had a completely balanced couple of days. You know, these few days are balancing with a lower point of control, just like I'm drawing here in pink. And the expectation is that that's likely to continue. The news interrupted this. So if we end up going back to 30.75.50, the SOC, this idea, the push down into 30.50 or so, is likely to resume. Okay, we'll see what happens, but that's what's expected. Anyway, hope you picked something up today. Good luck, and I'll catch you tomorrow morning. Take care.